Hello investors. So it's been a bit of a rocky month for the markets. The month started off pretty good, but thanks to a new COVID variation, Omicron, things just kind of tanked towards the end. How much of a scare it's going to be, how much of a reality it's going to be, nobody knows. But I guess markets do wobble around. And our benchmark, the NSE 500, fell over 3%. The good part is your portfolio fell less. And by now, on our long journey, you must have realized that we generally tend to have good, solid, defensive quality stocks. And it's not just about markets going up, it's also about doing well or falling less when markets fall is very, very crucial towards the long-term journey of investments. So, in that sense of the term, yes, it's been volatile, but it is satisfying because true to our style, true to our culture, we tend to fall less when markets fall. And that, I think, is very important or intrinsic in the long-term wealth creation process. One good thing obviously about this whole Omicron thing is that a very important commodity which I covered in the last month's newsletter, which is crude, has corrected sharply. Brent was nudging 80 plus the last time we spoke, and now it's at around 70 as we speak today. And this is very, very important for us. In fact, commodities as a whole have corrected, and more so crude, because crude is a very big input for a lot of industries and stocks that we hold. Crude and their derivatives are very intrinsic for specialty chemicals, for some of the pharma plays, and many more industries that we have. So that is, I think, one big positive thing. Let us see how it's a commodity, how it pans out. But this correction is crude is very, very positive for your portfolio. Speaking about your portfolio, we've had a whole season of quarterly numbers. So let's use this opportunity to review your stocks, how the quarterly numbers have come out, how are they placed fundamentally. So on the slide that you see on your screen are those stocks which are positive in our play. There are, out of the 22 stocks in your portfolio, 19 we think have come out with very, very good numbers, and that is why they come under the positive category. You will see the list on your screen, and the interesting part or the encouraging part is that sales, which you can see in the light blue header, has actually positive. So what this means is that the companies that we hold continue to deliver good growth. The list goes longer, and these are the 19 that you saw. Here also you will find that as far as the sales column goes, all continue to deliver excellent sales growth. And this is very, very intrinsic to the long-term growth portfolio that we are holding. The problem that happens, as I mentioned, with regards to crude, commodities and input cost is what you can see in the extreme right column, which is the operating margin. So when your raw material costs go up, automatically your operating margins take a hit in the short term because companies take time to pass on the cost hikes to the end customers with a bit of a lag. So this really covers that important input, the important commodity of crude. The second area, which again we pointed out in the last month's newsletter, was supply chain issues. As you know, that supply chain issues is nothing but manpower related, and it is not something that will get rectified in a day. It takes time, it's a process, but from all our research and all our readings, we do get a sense that supply chains are easing out. As I said, it's a process, it doesn't happen in one day. So we feel optimistic that in the next quarter, a lot of these companies which have seen market compression, and this is, mind you, happened across the industry, in most stocks in our markets, will actually re-inflate and will again move northwards, which will help the overall profitability. Obviously, a portfolio is a bouquet and not everything can be great. There are some stocks we are worried about, and these are the 4 companies. Again, great businesses, great track record. I mean, some of them are marquee names. But what you will see is that we tend to be a little concerned about the profitability or the growth that is happening in these stocks. And that, I think, is something that we want to bring out. As you know that we are very actively watching your portfolio, and these 4 stocks come immediately in the radar. We watch how they are performing price-wise, what is the volume play out, what sort of utterances are coming from the management, or what other inputs that we are getting. Coupled with this, as you know, we are trend investors and we are very sensitive to price and volume movements. We also see that very closely. In case we find that the prices or volumes give us some negative signals, we are very open to replace them. Exit is a very important part of our strategy. Great companies, great legacy names, but if they do not meet our profitability and price filters, these ask or call for replacements. And that is something what our research team is always actively working on. So this is something that is what is in the pipeline. As I said, it's not that they're going to be replaced, but as I said, that they are in the radar, being watched very closely. With that, I guess this is holiday season, so I don't want to make it very long. If you have the courage, if Omicron doesn't put in another big shadow in our lives, please go out and enjoy the year. We've been locked up for far too long. Use a few days of time with your family and friends, and Happy New Year well in advance. Thank you.